So today, I want us to talk about value-added tax, right? Value-added tax, value-added tax, VAT. So what is VAT? VAT is a tax charged on goods and services. On goods and services, right? When you buy, they charge VAT. Then when you sell, you charge VAT. But you don't always, not everyone charges VAT. There are businesses and individuals that charge VAT. But before you can charge VAT, you must be registered as a VAT vendor, right? You must be registered as a VAT vendor before you can charge VAT on your sales, right? Now, the VAT that is charged on sales is referred to as output VAT. And then the VAT that is charged on purchases is input VAT, right? So which means you've got two types of VAT. You've got output and you've got input, right? Now, who qualifies to become a VAT vendor? So a person or a business can be registered as a VAT vendor. Now, there are two instances where a person or a business can register for VAT. Number one is the mandatory registration. Mandatory registration. So on this one, everyone who is selling and in the past 12 months of their business, they have sold 1 million worth of taxable supplies. We call the goods and services that are taxed as taxable supplies. Taxable supplies. Right. Now, you can also register as a VAT vendor even if you did not make that 1 million in the 12 months. If you estimate that in the next 12 months, you will make that 1 million worth of taxable supplies, right? So on the mandatory registration, you must have made 1 million worth of taxable supplies in the past period, or you must estimate or expect to make 1 million worth of taxable supplies in the next 12 months. Now we also have the voluntary registration. So on the voluntary registration, you register if you have made 50,000 worth of taxable supplies in the past 12 months, right? 50,000 instead of 1 million, you have made 50,000. So you can register voluntarily. You are not obliged by law. But on this mandatory registration, you are obliged by the Income Tax Act. Income Tax Act, right? It requires you to register if you have made 1 million worth of taxable supplies, or you expect to make 1 million worth of taxable supplies in the next 12 months. Now, let's jump to calculations, right? We jump to calculations. Okay, so as we jump to calculations, I just want to highlight that for tax purposes, for VAT purposes, you have different categories of taxable supplies. You've got standard taxable supplies, which are currently at 15%. Then you've got zero rated taxable supplies, which are currently at 0%. And then you've got exempt supplies where VAT is not applicable, right? Because those items are exempt from VAT. Then you've got deemed supplies. Deemed supplies, it's when uh, you are allowed to claim VAT or to charge VAT on certain items which are not subjected to zero rated standard rate as well as exempt supply. Right, now let's do our calculation. So we're going to focus mostly on this one, on 15%. On our example, we're not going to focus on the other three. So we will do a separate exercise where we explain zero rated exempt supplies as well as deemed supplies under the income tax module. But on this one, on financial accounting, we're just going to focus on 15%. Right, now let's take an example. So on our example, let's draw a table. Now on our table we will have what we call a marked price. Right? Then we will have here VAT. Then here we will have selling price. Then here we will have let's do this one for now. Right, let's do this for now. Then on another example we will populate more information. Now let's say here we will have your number one. Let's say on number one you are selling something, so we'll say sales. Right, you are selling something, the selling price is 100 rand. Right, now how do you calculate VAT on this? How do you charge VAT? Remember we said VAT is charged when you sell or when you buy, which means when you buy you pay VAT, then when you sell you charge VAT. Right, now we said we are going to focus on 15%, so the standard rate is 15%. Now how do you calculate VAT? So to calculate VAT we are going to say 100 times 15%. Right, then we get our VAT. Right, so 100 times 15% will give us 15 rand. Right, and then what is the marked price? The marked price is actually the selling price inclusive of VAT. Right, it includes VAT. Now how much will be the selling price? So how do you calculate inclusive of VAT? You take 100, you say times 100 over 115, sorry, times 105 and 115%, which is this 115 you've added over and above 100%, which is the original selling price. You added 15% to make it 115. So the value will be 115 rand. Right, 115 rand. So let's do another example. Let's not use 100 because 100 is confusing. Now we're going to use 200. You're still selling, so we're using 200. Right, now we say 200 times 15%. Right, So 200 times 15% will give you 30 rand, right? Which means VAT here is 30 rand, right? Now, what is inclusive? What is the marked price, which is VAT inclusive amount, the amount that includes VAT? So you still use the same method. You say 200 times 115%. So it gives us 230, right? It gives us 230. Now, on number 3, we are still selling sales, but in this case, you don't know the selling price. You don't know the selling price. They gave you a VAT amount of 50 rands, right? You don't know the selling price and you don't know the marked price. They gave you VAT amount, the selling amount of they gave you the VAT amount. So how do you calculate the selling price or the marked price? So to calculate the selling price, you will say 50 rands times 100 over 15. 100 over 15. Where did you get 100? 100 represents the selling price, right? 15 represents VAT, and 115 represents the marked price, right? So it means you're going to say 50 times 100 over 15. Then you will get your selling price. So your selling price will be 333 rands 33 cents. Now you must always remember the percentage that you use to divide here must be the percentage of the amount that you use here, right? The percentage that you use to divide here must be the percentage of the amount that you've used here. So we used 15% because 50 is 15%, right? Now let's calculate this one. So we're going to calculate it in two ways because we've got this and we've got this. Now let's take 50. We say times 115 because we want that one. Divided by 15. Remember I said you use the percentage of the amount that you've used. Now we say 50 times 115 over 15. So it gives us 383.33. Right. Now let's do it using the selling price instead of that 50 rands. So we're going to say 333.33 times, we said the marked price is 115. So we're going to say times 115 divided by this, the percentage of the amount that we are using. In this case, the selling price is 100%. So we're going to divide by 100, not by 15, because we're not using VAT amount. We're using the selling price. So we say 333.33 times 115 over 100. Then we still get 383.33. You round off to the to 2 decimal places. Right. Now let's take number 4. On number 4, you are still dealing with sales. You don't have sales amount, you don't have VAT. You've got the marked price. The marked price is, let's say it's 450, right? You don't know this one, you don't know this one. How do you calculate them? Now we are going to say we take that amount 450, we say times 450, we say times, which one do we want to start with? We start with VAT times 15 because we want VAT, then divided by, we divide by the amount that we are, the percentage of the amount that we are using. So we're going to divide by 115, right? Then how much do we have? How much will be our VAT? 450 times 15 over 115. So we get 58 rand 70, round off to 2 decimal places. Right, now you've got VAT, you've got inclusive. You can use any of these two to calculate the selling price. Let's start with the one that was given. So we're going to say um, 450 times the selling price is 100, so we say 100 divided by 115. We use the same percentage of the amount we're using. Then the answer will be 391.30. Right, now let's calculate it using VAT. We said VAT is 58.70, so we say times 100 because our selling price is 100, divided by 15. We divide by the percentage of the amount that we're using. Right, so we're going to say 58.70 times 100 divided by 15. Then we get 391.33. So it's due to rounding off, but it's the same amount. Right, now I want you to pay attention. When you calculate VAT using the selling price, it means you must divide by the percentage of the selling price. When you calculate VAT using the marked price, it means you must divide by the percentage of the marked price, which is 115. We normally call it inclusive, the amount inclusive. So the selling price is exclusive. When they say exclusive, it means VAT is not included. It's still 100%. When they say inclusive, it means it's 115%. Right, and you can use VAT to calculate any of the two amounts, either the inclusive amount or the exclusive amount. So you can work it out from any angle, either from inclusive, either from VAT, or either from exclusive. Right, so we are going to end our activity here, and we will take questions. Please comment on the comment section and tell us what you think. Also tell us if it does make sense. If you've got any question, please comment on the comment section and let us know so that we can assist. Thank you. Please subscribe, comment and share. Thank you.